If the open price is the first word in the story of every candlestick, then the close price is the final sentence, the moment where the entire session reveals who truly won the battle. And for many traders, especially professionals and institutions, the close price isn't just important, it's the most important price of the entire candle. The close price is simply the last traded price before the candle ends. It tells you where the market finally settled after all the noise, all the pushes, all the rejections, all the battles between buyers and sellers. This is the moment when both sides stop fighting, at least until the next candle begins. Let's break it down in a simple way. Imagine you're watching a soccer match. Teams go back and forth, attacking and defending, but the only thing that really matters at the end of the game is the score. The close price is that score. It's the final verdict on who controlled that round. Here's why the close price matters so much. If price closes higher than it opened, the candle is bullish. If it closes lower, the candle is bearish. But the location of the close tells you far more than just the color. For example, if a candle closes near its high, it means buyers dominated the session right until the end. They didn't just push price up, they held it there. If a candle closes near its low, sellers were in control from beginning to end, but the most interesting candles are those with long wicks and small bodies. This is where the close price becomes a clue. If a candle moved dramatically, but still closed near the middle, it signals hesitation. Buyers tried, sellers tried. Neither side could win decisively. The close reveals this uncertainty with one simple mark. Let's use a real-life analogy. Imagine a long debate. People argue professionally, raise their voices, interrupt each other, bring up points and counterpoints. But eventually, the conversation ends. What matters is not who shouted the loudest, it's where everyone stands at the end. That final stand, that's the close price. The close price is also one of the most watched levels by institutions. Daily closes, weekly closes, and monthly closes determine whether a market is trending, consolidating, or breaking key levels. A breakout only becomes real when the candle closes above the level, not when it temporarily spikes above it. Professional traders repeat this rule constantly. Wicks lie, closes don't, because only the close represents committed sentiment, not temporary emotion. In smart money concepts, the close price becomes even more important. A displacement candle is identified by its strong close in one direction. A change of character is confirmed only when the candle closes past structure. Liquidity grabs become obvious when the wick breaks a level but the close returns inside. The close price defines the body of the candle, and the body is where true intention is revealed. A big body shows conviction, a small body shows hesitation. A close exactly at the open creates a doji, pure indecision. Here's a simple scenario that happens almost every day in the market. Price approaches a major resistance. It spikes above it. Fast wick looks like a breakout. Traders rush in, thinking price will explode upward, but the candle closes back below that level. That close completely changes the narrative. Instead of a bullish breakout, it becomes a liquidity grab, a trap. And smart traders know to expect a move in the opposite direction. In day trading, the close price helps define intraday bias. If the 5-minute or 15-minute candle consistently closes above the key level, that level becomes support. If it closes, keep forming below it, that level becomes resistance. Even in higher time frames, the close price has enormous influence. A weekly close above a major zone can change the entire direction of the market. A monthly close can confirm long-term trends. These closes become anchor points for institutional strategies. Let's make this extremely relatable with a simple everyday example. Think of each candle like conversation. The open is how it starts. The highs and lows are all the emotional ups and downs. But the close, that's where the conversation ends. That's the decision. When you understand the close price, you understand where the market truly stands, not where it temporarily wandered. So, to summarize, the close price is the last traded price of the session. It defines the candle's body and sentiment. Closes confirm breakouts, reversals, and structure. Closes reveal true control between buyers and sellers. In the smart money concept, closes determine displacement, structure breaks, and liquidity behavior. The close price isn't just another number on the chart. It's the conclusion of every battle, the final say, the truth behind the candle. Learn to read the close and you learn to read the market's intention.